Goes to Giles Beckford beaming in from Wellington. Giles, the word of the day is calm, and by golly, you're looking it. You don't look like you've been assailed by dramatic collapses anywhere.
John, it was very, very calm indeed. Now, you as a fledgling junior stockbroker in your day may have some distant memories of the 87 crash and certainly some of the corrections after that. I can remember on the day of the 87 crash, being down on the floor of the Wellington Stock Exchange, you really could see the furrowed brow, the narrowed eyes, the sweaty palms, the shaking palms, and the chalkies frantically putting up prices and then rubbing them down as much as just as they'd finished. None of that today. Of course, it's all on screens, but we knew there was going to be a bit of a hit. We watched the market open, bang, down about 2%, nearly 200 points. And I thought, well, who's to know, will it last? But the good sign was, of course, that Wall Street ended strongly. And from that point of view, you thought that really the damage was always going to be probably limited in New Zealand. And so it's proved to be. We've got away. We've in fact had worse days this year than what we've had today.
Yeah, thank you, because you're going to update the markets for us at the end, aren't you? But you do want to talk about the unemployment, the latest unemployment figures?
Indeed, these are for the 3 months ended December, and people had been expecting a wee bit of a soft showing because the previous 3 months, the ones ended in September, had been just astronomically strong. We'd created something like 56,000 jobs, and everybody thought there would be a bit of payback and slowdown. But in fact, it's a little bit stronger than expected, about 12,000 jobs created in the past 3 months. The unemployment rate fell down to 4.5%. That's the lowest since late 2008. And on that point of view, you would say that this is a labour market that's reasonably tight. You burrow into the numbers, there are just a few little signs that perhaps we have a mismatch between those who are looking for work, but they actually don't have the skills to fill the jobs that are available. And that's a well-known story as well. On the wages side, it was steady, an annual rate of 1.9%. That's where it was in the previous quarter. And on that basis, there's not too much in the way of wage inflation coming through. Boil it all down, remembering that the Reserve Bank later this year will have a mandate to try and keep employment at full levels. It does take into account employment now and wages. You'd have to say on the basis of these numbers, it wouldn't have changed its interest rate calls that it's going to make. And in fact, we'll see that tomorrow. We'll have the first interest rate review from the RBNZ.
Thanks, Charles. First of the major company earnings reports out today too, right?
Just a very quick touch. We're going to get inundated in the next few weeks, and you're going to be bored of hearing from Nola, myself and Jono on that. But ASB Bank, the number 4 ranked bank in the country, owned by CBA in Australia, a bumper half-year result for them, $593 million after tax. Good earnings across the board for them. The decline in their profit margins and their interest rate margins has finally stopped. So they actually had a slight growth, but a good fall in their bad and doubtful debts. That's a sign of an economy that's in pretty good shape. So they were pretty cheerful, although they sort of underplayed a wee bit when I interviewed them. Fair to say that they're probably on course for $1 billion plus full year profit, which we'll see in August.
The dividend going to the Australian parent, of course, Giles.
Well, naturally. That's because you're one of the few lucky New Zealanders to have CBA in your portfolio.
What have the markets finished on?
Well, at the end of the day, the top 50 index down 47 points. That's just under 0.6% at 8195. As I was saying, we've had 4 days worse than that this year. So put it into perspective, last year the share market rose 22%. In the past 5 years, our share market has doubled in size. You get a little bit of payback on that. On this basis, Australia's also looking good. They're up just under 1%, and markets through Asia are generally stronger as well. So perhaps we've seen the last of the immediate knee-jerk and the worry, although the expectation is that there will be a bit of volatility for some time to come as markets just calm down. On the currency front, we can tell you the New Zealand dollar, 73.1 US cents and 92.7 Australian.
Giles Beckford, our business editor. Thank you very much indeed, Giles.